JBlog 21st of February, part 2. So in the first part I talked about what I see currently going on in the news and from a big picture perspective. And now I start out with a chart of the S&P 500's PE ratio over since 1880, I guess it looks like. And we're once again um, above 20, actually at 2042. The dividend side of that is currently the S&P 500 is paying 2.02% dividend. Um, the mean over those many years is at 16, and the median is at 1289. So once again, if Wall Street likes to tell you that the S&P is currently undervalued or fairly valued, there's nothing undervalued or fairly valued at this about this. This is terribly overvalued at this point, especially considering the economic situation of the small people out there, like small businesses, consumers, people in general, the nation, all of the nations basically have never been this indebted, and we have way too much capacity, and we really don't need things anymore, so many things. So um, this I'd like to see this market down somewhere in the low, um, you know, 12, 11, 10. Then I'd consider it undervalued. Actually, hell, I'd like to see it at 5. Then I'd really like to buy it. But at its current level, it is ridiculously overvalued. So with that in mind, um, one of the stocks that I continue dabbling in and continues to give me grief, and I don't know why I continue dabbling in it, but I do, is Apple. Um, and here's the Apple chart. Possible head and shoulders formation with two humps on the left side. So this is kind of a Quasimodo sort of um, head and shoulder, but possible lower high and not quite a lower low yet. We'll see how it continues. But the 1030 moving average is definitely on the bearish side now. It has broken through all of these trend lines, and this seems to be resistance right now. So we'll see how that continues. But I don't mind being short Apple at this point. Not that I don't think it's a great company. I think it's a great company. I am definitely a Mac guy, but that doesn't mean I can't short the company. The S&P 500, of course, had this run up here. I still see this as a short covering rally um, from this. In my mind, what was a plunge protection team interference right here. They were fearing after this big drop and the next drop on Friday, they were fearing a Black Monday the day after, so they intervened in the market. Now I have no proof for that, but that's just what it feels like. That because that just did not seem natural. It made no sense whatsoever. So I'm gonna chalk that up to government interference, which caused this short covering rally. But of course, on Thursday, I believe it was on Thursday, the news about the discount rate being cut came out, and that will take the wind out of the sails of the market. It is already definitely weakening here. You cannot see it so much in the S&P yet. Where you can see it, let's skip over here to the New York Stock Exchange Composite. Definitely doji on Friday. Looks like this market is running out of steam at this previous high here. So this is a potential double top in a potential downturn underneath previous resistance. So well, I've been saying this for a long time, but I continue to believe that this market is in trouble. And realistically, if we ignore this little blip here that happened at the beginning of the year, which was probably also fake, then realistically, this market hasn't done anything since, what's that, October? Yeah, October. Basically, this has formed resistance, and now it has not even broken that resistance, and now it is making a possible lower high. So very weak. Another chart of Apple stock charts. I like the stock charts because the pictures are nicer. Similar, very similar chart. We've had a little high here, Macworld. Macworld is over. Apple has the tendency to drop in the spring and then rally in the fall again. We'll see how many people can continue buying iPhones. It amazes me how much, not that the iPhone is particularly expensive, but the plans that come with it. Wow. I mean, people just blow $100 for what? I don't get it. I mean, I've got an iPod. I like it. It's a wonderful toy. But it doesn't cost me anything on a regular basis. But OBV on Apple is definitely still very strong. Mind you, it's coming into overbought territory on stochastics, so we'll see how that goes. AGU I don't hold right now. That's an agricultural play. Biggest fertilizer, one of the biggest fertilizer companies in the world. Here is a company that is interesting. I started shorting this company, and this is Alpha Natural Resources Incorporated. It's basically a coal producer. If it is true that the market is going to turn down, then coal is going to get hit. Coal had an amazing run up. It ran up all year long on the Chinese play, and at this point I'm looking at Alpha Natural Resources here. I'm looking at a PE ratio of 60, almost 62, amazingly high. I'm looking at a potential lower high here, and it's just a stock that I'm shorting into. I'm not taking a large position. I'm just shorting a piece here, shorting a piece there, kind of a negative feedback trading, just because I believe that this is as coal is likely to turn over, I believe, then that would be one of the companies that would get hit. Coal, I had a coal index here and it didn't look too pretty. Coal index right here, and it is starting. It's basically the same chart as ANR, and I think there's some potential for weakness. So I'm currently short that one. I am, as I said before, I am currently long Goldman Sachs, which you know, what a bunch of bandits, but if they can make money, well, I am a trader. So what can I say? I consider that company to be undervalued at this point. So we'll see where that goes. It's a small position, just dabbling. We'll see. SKF, very disappointed with all of these reverse. SKF, SRS, again, it had such a nice run up, and then it fell down again in the last week. So we'll see where that goes. I took another chunk of SRS. Horrible real estate news coming up in 2010. SRS, in my mind, is a buy and hold. That's what I'm doing, and I'm planning to make lots of money off of that one. The US dollar has definitely had an amazing run up, mostly on troubles of the euro, but other currencies seem to be in trouble as well. Let's see how that goes. Unfortunately, I sold my options on that too soon. Vale, I don't have any right now. So in general, it's still a wait and hold, but I think you do have to look at the bigger picture, and the bigger picture is that this is simply not pretty. And now that the Fed is starting to tighten, and China tightens, and India tightens, and basically not most, but a lot of the countries around the world are basically broke. Governments are entirely too indebted. They need to borrow money. They're going to be competing with businesses for borrowing money. Eventually, nobody will have the money to buy the bonds anymore, and the whole thing just has to play out, and it's not going to be pretty, and it's going to take a long time to play out. So the big picture is I position myself on the bear side, and I continue staying there because this just does not work. I hope you make lots of money. Good luck next week, and all the best. Bye.